Welcome to Albuquerque Real Estate Talk, where the latest in real estate news, sharp commentary, and expert market analysis come together. Hosted by Tracy and Tego Venturi, the dynamic duo from one of New Mexico's top real estate teams for over 2 decades. Albuquerque Real Estate Talk starts now.
Welcome to Albuquerque Real Estate Talk, episode 502, end of August 2024. And this week we are going to talk about a frequently asked question page that we launched for buyers and sellers regarding the changes in real estate that we've talked about a bunch, but we're going to talk about it again. We're going to talk about some AI apps that are coming into real estate, Tracy. I have some home value forecasts, and then you're going to talk to us about closing costs. And I think it's a good time to do this because things have changed in the way who pays for what in a real estate transaction between the buyer and seller. And so we can get about that. And of course, we've got all kinds of goodies. We can always go down the rabbit hole.
We can, for sure. We always love to come here and talk real estate. It's like our coffee and real estate episode, right? We sit and chat all the time, real estate. So Tego, a lot of open houses this weekend. You know, it's like the kids are back in school. It's time to get out and see houses. So if you want to find some open houses to look at, you can definitely get on our website. Tego has a tab for that at welcomehomeabq.com or call us 448-8888. We can schedule time to actually go to the houses when it works for you. We don't mind. That's what we love. But what did change, and you all know this because you're our regular listeners, is we have to have an agreement signed before we can show you a house, which just tells you how we get paid. And we have an agreement that we're going to work together.
I want to talk more about that because you talked about open house and the written agreement in the same context. So we need to clarify that. But first, we are the Venturi Realty Group, Tego and Tracy Venturi of Real Broker here in Albuquerque. And Tracy already gave our number, but our website, and you gave our website too, didn't you? Welcomehomeabq.com. All kinds of goodies there. But let's talk about, we put up a frequently asked question page on our website regarding changes and what buyers and sellers may want to know about the change in real estate. And if you've been paying attention at all, you know there's been some big changes in real estate. A lot of the headlines out there, Tracy, have been something along the lines of the 6% is going away, or the fees are no longer set, and stuff like that. And you and I know and have been saying this, they were never set. Every broker sets their own deal.
Right. There isn't a national, this is what realtors charge. So when they say fees are negotiable, what they mean is there isn't a set standard by like the National Association of Realtors.
Or an association or anything.
Yeah.
But each broker or brokerage can set their own fees. And that's what commissions are negotiable means. But back to your thing, one of the requirements now is a consumer, a home shopper, wanting to work with a realtor to show them homes has to enter into a written agreement. They have to agree on what the price that the realtor is going to charge them, the buyer broker, and they have to do there's a couple disclosures, and it has to be a fixed fee and it can't change later. It's a fixed set fee and what that fee is. However, that written agreement is not required for open houses, at least the way the rule is written.
And Tego, that's because when you go to an open house, the person that is hosting the open house, the realtor or realtors that are at that house hosting it, are working for the seller. They're not working for the buyer.
Correct. And it's a new concept that I think in our industry people need to get used to, is which broker or which realtor is working for the buyer and which broker, which realtor is working for the seller. So if you're just touring a home, or you go to an open house, that realtor is working for the seller. Their job is to sell that seller's house, not represent you in buying the house, right?
And a lot of times the realtor that's in that open house might not be the actual listing broker of that property, but they still are working on behalf of the seller unless they talk to you and you decide you want them to help you also as a buyer.
Yeah. No, it is. And at that point, then there would be a written agreement on what the fees are and how that all works. Anyway, we do have an FAQ page on our website. There's a lot of details to this, Tracy. And, I've been teaching about it. I've been going all over teaching about it. And it's complicated. It's not complicated for the buyer or the seller so much. It's just a couple changes, but it's complicated in the way we actually do the business. And having somebody that understands the process is really critical if you're buying or selling, because if the professional doesn't quite get all the ins and outs of it, because there's a lot of extra negotiations involved, there's extra forms involved, there's extra conversations involved. There's a lot of little pieces, and we've been training on it here on the team a lot. I know we're tired of it, but it's important because we want to make sure that both buyers and sellers are well taken care of and are getting what they need and taken care of. So,
and you've been doing an awesome job, Tego, teaching our realtor community. I know you spent many hours teaching others so that the other realtors in our community are up to speed on it. So one of the things I'm talking about today is closing costs. And it's ironic because I keep looking, for those of you watching online, I keep looking out the door because a great title rep walked in and I thought, wow, here it is. Somebody that knows all about what it costs to sell a house, right? Closing costs. We can go there.
So let's break this down by buyer and seller. Okay. If you're a home seller, what are the closing costs you're going to have to sell your home?
Sure. So typical closing costs these days, right? And it can change. In my 22 years as a realtor, who pays for what has changed a lot depending on if it's a buyer's market or a seller's market. But some of the things have stayed very much the same. And one of those is that the seller has paid the title fees. So title insurance, title closing fee. Sometimes it's split, but typically it's the seller that pays for all the title work. And what they're doing is they're ensuring to the buyer that they're getting clear title, that somebody's not going to come after closing and say, hey, that's my house, right?
And let me just clarify something. There's basically two fees when you're talking about title. There's the title or the escrow fee, as they call it, or
it's called the escrow fee. And that's the work that the escrow officer, the person who actually does all the closing and puts everything together, they're the one who are collecting all the invoices for everything and putting together the closing statement and working with the lender to put together the closing statement.
Getting the tax estimate, getting the payoff estimate,
making sure there's no liens out there with the county or other entities, and then putting it all together on a closing estimate. So they're doing all that work behind the scenes, getting it ready for closing.
So that's the one fee. That's the title closing fee, as they call it, or escrow fee, different names for the same thing.
And then there's the title insurance, and that's a bigger number. Depends on the price of the house. The title insurance is on a fee chart. So every title company in New Mexico is the same because it's a New Mexico fee chart.
Yeah, the insurance agency in New Mexico, they have a set chart that every title company charges the same. And that's an insurance policy to guarantee to the new owner that they are truly the owner and there's no other people that can come back later and say, hey, that's my property or whatever it is.
The title companies have old time vaults. They used to be vaults, right? Where they had all these records and there'd be a title examiner who would, I think of it as like a dark basement, right? Where all these file cabinets are and stuff.
I understand in one county in New Mexico, it's still that way.
Yeah. So they literally, the examiner would go and look through records to make sure all the ownership has been properly transferred over the years, right? Now, most title companies have finally got it all online.
It's all digital.
But somebody had to take the time to go through all those documents.
We know in New Mexico, we do have some counties that are just not that big, rural, and they just
go to paper.
One person that has a file.
Fees that the title company charges for sellers, looking things up, wire transfer fees, just little things, tax information, things like that. One of the credits to a seller often is a tax credit. The county does property taxes. A lot of times we pay in arrears. Actually, it's usually a debit.
I was going to say, it's the other way around.
So you also, as a seller, are getting your taxes collected through the date of closing. And because New Mexico, we pay in arrears, sometimes it's a whole half a year or more of property taxes they're collecting, and they're giving them to the buyer who will pay the taxes when taxes are due.
Yeah, exactly.
So otherwise, sometimes sellers, if there's well and septic, a lot of times sellers are paying for those inspections, paying for their realtor fees, paying gross receipts tax, just different things like that.
Let's talk about the realtor fees because that's one of the big things that has changed. Customarily, or in the past, let's say pre-April 2024, the listing broker would
charge a professional service fee.
A fee. And many times, and again, this was not set in stone, it wasn't required, but many times that whatever that fee was, the listing broker would share a portion of that to the buyer broker that works with the buyer to buy the house. that's still available and that's still an option for sellers. It's not in the multiple listing service any longer. So that's the big change. You
Right.
can still do that. So it's another level of conversation when you're putting your home on the market to talk with your listing broker about what are the options, what are the best strategies, and there may be good reasons to tactics that you want to use as a marketing tactic to get your home sold. The one thing we didn't mention, and it's more optional, is a seller credit to the buyer or a seller assistance to a buyer that's buying the home. Just go into that a little bit.
Well, instead of the listing broker compensating for commissions, the seller can offer some sort of compensation for the buyer to use however they wish, which they could use to compensate whoever is going to represent them for the purchase of the house.
And traditionally, a seller credit or a seller assistance to a buyer could be used to buy down the mortgage rate, could be used towards some other closing costs. And lenders do allow that up to a certain limit. I think FHA, it's maybe 6% of the price. I
Yeah,
think it depends on
it
the loan.
depends on the loan type.
But there's different. So that's another fee a seller could have. Okay.
Buy
Anything else for
side.
seller? Or I think we hit it all on seller.
I think those are the big ones.
Yeah.
Then let's talk about the buy side.
Okay.
So buy side, most buyers are covering their own inspections. So home inspection, termite, and if there are any others that they want based on the property and what they feel they need. If there's well and septic, like I said, typically the well and septic, at least the septic is typically put on the seller side these days. Sometimes the well and water is on the seller. Sometimes there's some split going on there.
I think you make a good point there, is that it's all negotiable. It's all part of the negotiation. There's what's customary, but it doesn't mean it's set in stone.
Some of the other things besides inspections, prepayment of your property or homeowner's insurance.
Yeah.
So getting that homeowner's insurance policy in effect for the first year, plus starting an escrow account for the second year, and then property taxes, right?
Exactly.
Getting an escrow account set up for property taxes. But a lot of times you're also getting a credit from the seller. So you're getting some funds from them. So when those taxes are due, there's money in that account.
So if you're getting a loan, there's going to be
Exactly.
fees, right? There's going to be a credit reporting fee many times. There's going to be a processing fee. There could be an appraisal fee, underwriting fee. And it just depends on the loan program and the lender, because every lender is going to have different fees, different programs.
And just to be really clear, what lenders charge is, like you said, very different from lender to lender. Some of those out-of-state lenders that people find online actually charge a lot more to do the transaction and facilitate a loan than some of our locals.
A very common tactic is they throw out a very low mortgage rate, interest rate, and don't get into the fact that there's all these fees as well. So you have to look at the big package. We've talked about that before. You got to look at everything, not just the headline mortgage rate.
And that mortgage rate that they quote could be very different than what it actually is, because it's going to be based on your credit score and your overall health of your finances. So those are the big fees.
Let's talk about the one that is changed recently, which is the buyer broker's commission. So if you're buying a home, you want somebody to represent your interests, somebody to work for you through finding the home, negotiating the deal, and the hard part actually, which is getting from under contract all the way through to closing, making sure everything happens. Now that fee is going to be negotiated upfront before you start touring homes, and decide what that fee is, the buyer broker and the buyer. You decide that on your own. But how that gets paid could be some different ways. One is the buyer pays the buyer broker at closing. Some brokerages might have a upfront fee where we say, okay, we're going to charge you an upfront fee for this, and maybe it's an a la carte, and I'll just charge you to look at homes, and I'll charge you this much to write up a contract. And there's going to different models, right? But that buyer broker fee could also be negotiated as part of the transaction. And that's why having somebody understand the process and the changes, if you're buying a home, so that it can get worked in and make it work for you as a buyer. And who pays it? The seller could still pay it, the buyer broker fee. It's got to be negotiated a little bit separately than the way we did it in the past.
So Tego, we're towards the end of August, and just for our listeners to know, what we have seen so far is it's still happening the same way as it always has. It's just that how it's getting there has changed. We're still seeing sellers offering compensation to cover a buyer broker on some level, no matter whether it's a concession to the buyer that the buyer can use towards that or whatever. But a lot of the people listing their houses right now are filling out a form saying, I'm going to compensate the buyer broker because I want to invite them to come and show my house. I want to invite that buyer broker to feel like this is a property that is going to take care of that. Anyway, it's heavy stuff we've been in since we got on here, Tego. Let's move to something light and fluffy.
Okay, then I'm not going to do what I was going to do next then.
Okay.
Which was my big debate on Facebook this week. So.
Oh, let's talk about a newly listed property. It's so cute. 10920 Teal Road Southwest. It's a single-story house for $275,000. 3-bedroom, 2-bath, 2-car garage, built in 2002. Just a great little property and newly on the market. So if you're looking for something in that more affordable range, I'd highly suggest you give us a call right away. This house is south of I-40, just west of 98th Street, newer neighborhoods in that area. But this one was built in 2002, and it's not too far to get to the freeway to I-40. If you're interested in that.
Very unusual, nice house under $300,000. There's not a lot of them out there these days. And yeah, it's good. It's going to go fast.
So the other thing I wanted to do, and I hate to steal your thunder because you're the Statomatic, and I know you're known as that.
Hey, I got some great stats this week, but you okay? You can go.
I was just going to say, we talk about this pretty much every week. New listings in the last week, 307 newly listed properties. 62 houses went pending sale in the last week, and 263 had a price change.
Yeah.
So fairly similar from week to week from what we've been reporting. So very interesting. So tell me your stats, my Statomatic.
Okay, stats. First off, Freddie Mac just put out their quarterly report. Freddie Mac, which is one of the big lending entities that fund loans, they just put out their big report. And one of the things that was interesting is they did a real price growth chart. And so what they did is
as in not real?
As in they took inflation into it as well. So instead of just saying, okay, homes went up. So let me give you the stats here. This will make more sense. In nominal terms, since December of 2019, home prices have averaged about 11% per year. This is in our market. Okay. So 11% price growth appreciation per year, which is, off the chart, right? We had one year, whatever, it was 17, 18%. But when you account for inflation, it's closer to 5% price growth, which is still pretty high. And it's actually pretty good when you think about it, because if you had that money in cash, not most people don't, it would have lost value quite a bit because of inflation. But if you had it in a real asset like real estate, even though it went up faster than inflation, is my point, at a rate of 5% per year. I don't know if I could have said that in a more confusing way, but I thought it was an interesting stat I wanted to put out. The other thing that came out, it's actually a couple weeks now, it came out. Zillow does their home value stat where they look at the value of all the homes in a market and they give you a read on that. But they also put out a home value forecast, and they look out, I think, a month out and then also a year out. And for Albuquerque, it came in. So I looked at the top 4 markets in New Mexico. And for Albuquerque, Zillow was forecasting a 2.3 home value appreciation over the next year.
2.3%?
2.3%.
Up.
Las Cruces, 1.8. Santa Fe, 0.1. So basically flat. Farmington, -1%. So those are the top 4 markets. And when we say Albuquerque, that includes the entire metro, even though Rio Rancho is, I think, the third largest city. Shoot. Anyway, the thing that's interesting, so Albuquerque, 2.3% is what they're forecasting. The United States, they're only forecasting 0.9%. At least what they're forecasting is outpacing the entire country. And what I find when I look at I've got a map that shows all the different markets around the country, and Albuquerque is actually much better than many. So the Zillow forecast over the next year is very conservative, like
Yep.
1% nationwide. Albuquerque, again, like I said, 2.3. And I think that's just a lot to do with affordability. We know, Tracy, is still tough for a lot of people. We know that interest rates, I don't think Zillow thinks interest rates are going to come down substantially, which would change things as well.
I think I saw that everyone was forecasting like 5.9% next year, like just a hair under 6, which is great. Fives is good.
I think it would. We've talked about this, the lock-in effect that in the housing market in the entire country, definitely in Albuquerque as well, where people that do have a 3 and 4% mortgage, they're not super motivated to sell, even though maybe they want to move, maybe they want to get that other house, but they're sitting on such a good mortgage rate. It's really hard to give that up and go to a 6.5, which is what they are today. But maybe when they get in the low 6s, maybe that'll free things up. We'll see.
We'll see. I think there's a lot of people that I think they're motivated now. We've seen it, right? We've seen some change in atmosphere.
Yeah.
And people feel like, hey, it's coming down. We're probably ready now.
I mean,
Tego, I'm going to go back to the biggest cities. I just, of course, Googled it.
Yeah.
Albuquerque, obviously, then Las Cruces, and then Rio Rancho, which they have broken out separately. So that would.
That's what I was wondering. I didn't remember if it was Cruces or Rio Rancho is a large.
They're very close, 114,000 versus 110,000. Then number 4, Santa Fe. Then Roswell. Number 6 is Farmington. Wow, number 7 is Hobbs and Clovis.
Roswell. Oh, they didn't do Roswell. That's why.
When I lived in Portales in the 80s, Clovis was 20,000. It was a big city near Portales. It was a big day out getting to Clovis. Anyway, now it's 37,000. So they've grown 17,000 since I was there.
Yeah. Okay. I just want to talk about this real quick because I poked the wasp nest or the hornet's nest, whatever you want to call it, on Facebook this week.
And you knew you were doing it.
And I knew I was doing it. And boy, did I get it. So there was a story in just talking about home prices in Albuquerque. It was KOB posted their story just to update on home prices. And there was a lot of comments like, this is awful. And how can anybody afford to live? And wages haven't kept up. All the stuff we've been talking about forever. We all know affordability is poor. It's really bad. Home affordability is poor. So is rental affordability. It's hand in hand. Housing in general is broken. And that's my argument. But then a lot of people started chiming in about the big corporations are buying all the homes. It's the big corporations, and that's why home prices are so high. And yes, I knew what I was getting into. And I said, actually, here's the stats. In Albuquerque, in the Albuquerque market, 0.7% of all the homes, about 300,000, are owned by...
Of the 300,000.
Of the 300,000 homes. So
less than 1%.
About 1,500 homes, let's say, give or take, of the 300,000 in the metro. And I said, that's not the problem. And what I was trying to point out is we're focusing on this, the big corporations buying all the homes and putting all our energy in something that isn't a huge problem. I get it. And the other thing I say is we're not Atlanta. Atlanta's a different story, right? We're Albuquerque. In the last 3 years, there have been 0 homes that have been bought by big corporations. And you know what? The one context we need to add to this is a lot of those homes were purchased by a company called Home Partners of America, funded by Blackstone. And I know people say and remember, Blackstone and BlackRock, they're not the same company. Boy, people get that mixed up all the time, but that's a different conversation too. But Home Partners of America, and you know the plan, the program.
They don't work in our market anymore.
They don't anymore, but they did.
And they've been out for a few years now.
They bought a lot of homes. Was that program a net benefit or a negative for home buyers?
So Home Partners of America was a benefit, and they were buying homes, but buying them for people with a purchase that they could buy them out. So they basically was a lease to purchase program where we could have a client who needed a house, and maybe they had just started their new career and they needed a full year in that job before they could get a real loan that would get the price they wanted. And so Home Partners of America would say, go find the house and get it under contract in our name, and we'll buy it for cash. We'll lease it to you until you're ready to take it out with a mortgage and make the purchase. And the purchase price was pre-negotiated at up front. And most of these people locked in those home prices before COVID and before we had that big
or
spike.
early COVID.
Or early COVID.
I think they pulled out in 21, maybe?
I'm not sure.
Yeah.
But most of the people who bought using that program, so it was a lease purchase, even if that purchase price was 5% higher a year every year, they had like up to 5 years to make the purchase.
I think less than that. I think it was like 3 or 4. Yeah.
So they knew what the purchase price was going to be each year. It was already set when they bought the house for them. So as our prices went up 17% a year or whatever, I'm pretty sure that the people who used that program were able to, when the interest rates were down and they had a year or more in their house, whatever that change was that they needed to be able to have a mortgage, let's hope that all those people converted those to primary residences under themselves.
And this is the problem when we say, okay, big corporations buying the homes and renting them out. Tell me more, right? And that's just it. If you don't know that this was actually a net benefit for people, you're having the wrong debate. You're having the wrong argument. And you're focusing energy on something that isn't the problem.
But honestly, back in 2010, 11, 12, something like that.
That's what I was going to get to. So there
was
other company,
a buyer,
right?
A big corporate buyer that came in, America's Home for Rent.
America Home for Rent, yep.
They bought hundreds of houses.
They did.
And they were like bank owned, distressed, and they took advantage and that was their, not took advantage.
It wasn't just bank owned and distressed.
It wasn't. It was houses of a certain age and size and price range, right? They were trying to buy up to 250 back then, which was very doable.
Yeah.
And they bought hundreds of houses here and they put them out for rent. So a lot of people are paying America's Home for Rent.
But what was different about 2011 to 2015 or 14
is there were a lot of houses that needed somebody to buy them.
Glut of supply. It wasn't a buyer's market. It wasn't a seller's market. Sellers were thrilled to get their homes sold back then. So again, you can't talk about the fact that America Home for Rent bought all these homes back then as a problem for housing today. It's a different conversation. And I get it. I get how it's a trigger for a lot of people. My main point is let's focus the energy on the things that really could make a difference, which is the broken permitting system, the broken approval process, the broken development infrastructure problem, the not in my backyard problem. We can list them off. We can go on and on with why we don't have enough homes and why we don't have affordable homes. And the corporate thing is just a red herring that is distracting us.
So that takes us back to where we began this conversation, which was that you got in a little online tussle with people telling them they're wrong. It's not about big corporations coming into New Mexico and buying up houses.
No, it isn't. It's not a thing.
Actually, you put some facts out so that.
No, facts didn't matter.
Okay.
No, I've got all the facts, but facts were irrelevant for most of these people. They didn't want facts. They like their story better.
Yeah. Okay. It's been fun. This is where we end it today. We have all sorts of other things we could chat about.
Well, let me finish off with one fun story since we got a little. That was a fun story.
That was kind of fun for you.
In the fact that I got into the fight. But I thought this was interesting is there's a new way to use AI in your real estate search. And there's a company that just launched a website. It's from CoreLogic, which is a big real estate entity, technology company. But they've launched a home search where you can have photographs, like if you have photos and like that you see of kitchens or design or things you like in a house as you're going around and shopping, you can upload those photos and it'll go find the homes for you using image recognition AI.
Finding ones that look like what you like.
Yeah. So it's going to be interesting. We're going to see a lot of experiments in AI and real estate search and real estate information. It's just going to see how it plays out. But I just thought that was interesting. We're going to see more of that.
Very interesting, and especially if it looks at the furniture, because a lot of times what furniture you put in the house makes it look very different than the walls and everything.
Exactly.
So, okay, There we go. Thanks for being with us again. We appreciate all of you listening, and let us know what real estate needs you have and how we can help you, what questions you have. We're here to answer them for you. And that's a wrap.
Thanks, everybody. We're the Venturi Realty Group, Real Broker, 505-448-8888. Welcome. Thanks for watching the video all the way to the end. We appreciate you. And please click subscribe. We'll keep you updated on what's going on with real estate in the Albuquerque area and New Mexico, and of course, across the entire country. Have a great one.